Hello there and welcome to the Pipnotic Symposium for the 25th of January 2021. Today we're going to talk a little bit about entries. We're going to use the supply and demand theory, the normal stuff that we always run through, but we're also going to look at the asset strength histogram because this is a pretty remarkable tool to incorporate into our analysis. And so the reason the asset strength tool is such a useful utility is because it's telling us a lot about the state of the market. Are we in a period of expansion or contraction? Are we reaching an overextended state of the market? I know this is overextension is kind of relative. I mean, look at Bitcoin. People said for a long time, oh, it can't go any higher, it can't go any higher. And what does it keep doing? It keeps going higher. But everything that goes up must come down. There are zero exceptions to this rule. Okay, and this is simply because people are running out of liquidity. There's no liquidity to buy higher the good prices, and the bulk of the buyers are waiting on the sidelines, sitting on their hands, waiting for a dip in the price of any asset at a much more attractive price than when price is racing north. And the asset strength histogram is a really awesome tool for doing just that. Okay, so if you consider the video that I did last week, where I went over the the asset strength histogram. If you haven't seen that, I recommend that you jump in and have a look at that, because it'll help answer some questions regarding some of the basic uses of the asset strength histogram. So watch that, and when you've done that, then you can come back to this video. Maybe this video will make more sense. However, I will go over some of the usages here in this video. So one of my favorite ways to use the asset strength tool is to use it for divergence at supply and demand. Okay, so we have, let's just go to anything. Let's go to, actually I know on this one on the daily chart there's a negative divergence where we have price moving higher, and we have the asset strength telling us something very, very different. Okay, so we have higher prices. We have the strength of this asset. The steam is running out, and this is happening at an area of daily supply. You can see this little red box just here. When you see this is a really good indication that price is very likely going to have a bit of a pause from this bullish run. When you see this, it's time to go to the small time frames and identify areas that could be an attractive place to begin to sell the euro and accumulate some American dollars. So if we do that, okay, we take the short bias down with us onto the smaller time frames, knowing that we are reaching this very high price point at supply. Then you go down to, let's say, the 1 hour chart. We can have a look for similar patterns, or the 4 hour chart. Let's just stick here on this chart. But if you look at this and you look in here, you can see, well, there's not, price is here now, but looking back here, the origin of this move is here. Okay, this is a low, so from here to here. Okay, and so what we're doing here is we are going to divide the chart like we like to do. Let's put red, go from the low to the high. This is the sell side, and this is the buy side. But we're not going to be buying because we are reaching an area of daily supply at a time where we can expect price to begin to move lower. Okay, so if you look at this, if you see this just now, in the leg down, what is the deepest price retraced to on the way up? Well, it came to here. Okay, so we had this area of supply. It's a micro supply. It didn't really do a whole lot on this time frame. It's not visible on this time frame, the damage it's done to the structure of the market. But you can see this is interesting because price turned there. See how the wicks kind of poked up there. We had one test, another one, we went a little bit deeper, and then we started to turn around. So this is probably the cheapest price that you want to sell at, judging by this. Okay, and so if you're not going to be looking to do anything there, well, then you want to be looking to do something somewhere else. And again, you want to be focusing on areas where price has not yet been. Obviously, we have the origin of the move, We have this one here, which is nice, and this is nice because this is the origin of this whole move. The release happened right here upon testing this area of supply. Price came down, we moved sideways a little bit. The area of supply above that is just here. Price moved sideways, then we left. The sell zone was established, then we left. So we have something in here which has already been tested. So we can expect price to come back to at least the high of this candle here. Okay, we still have this one here, which I like the most, because when price left here and moved through this area of demand, we don't have any tests back into that area since price left. So I can go from the bar all the way back, and price has not been anywhere back there. Price has only been to here. So this is the beginning of the sell zone for the origin. Oops, where's my little tool for my origin, which is just here. Okay, so this would be a very interesting place to look to sell, to begin to accumulate some orders for price to move lower, so short orders. Okay, and dividing the chart like this, where you have your sell side and the buy side, keeps your hands, rather keeps your ass on your hands, so you're not doing anything. And if you look here, you say, oh, here we have an area of supply. No, you're not allowed. Selling here, are we allowed to sell in a green square? We're not. We're only allowed to sell in a red square. We're only allowed to buy in the green square. But we're not buying in the green square because we know on the daily chart that we have negative divergence at an area of daily supply. So there's a higher likelihood of price moving lower than there is of price moving higher. Okay, so that was one example. Let's have a look at, I don't know, the Aussie dollar, American dollar. Let's have a look here on the bigger time frame, see where we are. Oh, we're really moving north. I'm going to zoom out. Okay, so we're going to do the same thing here. This is just a longer term one. Color, the sell one is from here to here, and the buy one is from here to, let's say, here. Okay, and so if we're looking at places to sell, we're not allowed to do anything. There's nothing to sell at here. I mean, there's absolutely nothing formed here. We do have this. Okay, we have this, which is nice. We have this, which is also nice. And we have the beginning of the sell zone, which is about here. So there's no reason to sell for a price any cheaper than the highs of these pullbacks. And this is because when price came up to this area, we left. We came up, we left. We came up, we left. There's an interest, historically there has been an interest on holding price below this level. And so if price comes above that level, or maybe there'll be another interest on selling from this price point and higher, which brings our attention to this area of supply just here. And notice as well that we have testing here, testing. This one cut through it. I'm just going to mark that area off. Okay, so we had one test on the departure, another test. This one sat on it, and then price left, went through it. So this area here is the one responsible for removing this demand, which is now gone. And so now this is the one that we'd like to focus on. So we're just going to mark that one off. Let's do something like that. We can't really see what it looks like. It's pretty messy on this time frame. But you can see we had a huge departure. And this is interesting because when price left, there are no tests into that area. This is completely clean, fresh. We have, let me do this. We have this area just here. It's been tested once, twice, 3 times, 4 times. So we don't expect price to turn before we get at least to the highs of these, at least to around here. But above that, we have this, which is really interesting. Change the color to red. Just here. Okay, so this would be the one that you would expect price to turn at. This is because last time price came up here, we went down, came here, we went down, here we went down. So you have to kind of find like an average of the turning points. How far was price able to retrace this move before it turned around? Well, it came here and here and here, then it turned around. So if price goes beyond that point, at least into this area of supply, which has been tested quite a few times, well, then there's a very high likelihood that price is going to turn around. And this is a preferable area here. And here we have a nice departure again. We have the candle to the left. There's been nothing back, no tests since it was established. Here, no test since it was established. So here we have a really nice spot here, and here we have another nice spot just here. Okay, this is on the weekly chart. Okay, so if we go down to a smaller time frame, let's go to the daily chart, for example. We're not even close to that area, but ideally we'd want to see some kind of a confirmation that we are going to move lower. And if you look here, we're on the daily chart. Let's see how far away we are from that. We're still up here. I mean, price could easily keep going, but notice as well that we are reacting at this area just here. We have another one here. But the thing I don't like about these is price has already been back to this area. We've already traded through this area here and throughout these highs here. And so this would make me feel uncomfortable selling here. I would expect price to continue moving higher until we find a place that price has not yet been. And this leg is exposed. It has not been tested or rebalanced. So from here and down is the most likely place for price to turn around. Okay, so you can see that price is getting tired. Okay, we can see that we have prices moving higher, really a lot higher, but the strength of this asset is not supporting that. And so we're probably going to, at some stage, see this pair turn around. So what you want to do is you want to wait for the major areas of supply. You want price to poke into those. And you can either put a limit order at these areas, or you can wait for some kind of a confirmation. And my mentor, my old mentor, he's not my mentor anymore, Chris Laurie, he used to say to me, they're called big stones entries, and he calls them big stones entries. Well, it's pretty obvious because it required big stones to stand in front of price in the way that limit traders do, where they just put a limit order on at an area of support and resistance, supply and demand, whatever. But you don't need to do that. You don't need to do that at all. You can simply wait for price to get to the area. Then you can go to the smaller time frame, let's say the hourly chart, and you can wait for price to poke into the area and then show you signs via the histogram that it's probably not going to hold. Rather, the trend is not going to hold. It's not going to continue moving high. It's going to poke into an area and then it's going to slowly turn around and move lower. Okay, so this is what I like to do. Okay, well, I'm not going to spend too much time on this. If you have any questions, please let me know. Type them in the YouTube channel, or you can leave them in the Discord channel. Thanks for watching.